Hi, good evening to Doctor and my fellow friends. Today we are here to present our group assignment on ACT3129 Financial Accounting and Reporting 5. Title will be Limited Liability Partnership. Before we present our slide, my name is Niveda Ilangovan and metric number is EX0371.
My name is Michelle, daughter of Kanabalan, and my matrix number is EX03649.
Hi, my name is Nandini, daughter of Gunasagaran. My matric number is EX03648.
Hi, my name is Ashwini Jagdishan and my metric number is EX03654.
Without any delay, we go to the present about the introduction. A limited liability partnership is a type of business entity that combines the furthers of the private corporation with a traditional partnership. LLP is given a participant limited liability status and feasibility of the internal agreements through a partnership agreement. Comparison to a slow property or traditional partnership, this combination will provide the entrepreneurs and the businessmen with a more organized business vehicle. Under the Company Act 1965 is the most of the dealings. It's give freedom to the regulating the business operation in line with the partnership agreement while having a limited liability status. And LLP also created for the purpose of caring and professional parties, but is must made of the natural individuals in the same professional and individual insurance authorized by the register, who is the chief executive officer or any other person so chosen by the SSM. Next is the partners and their relations. A partner's right to the profit and loss sharing is a transfer. However, the transferee does not have the right to participate in the administration of the LLP or access information as a result of the transfer. That's all from me. I pass to next presenter.
Okay, thank you, Nivita. Now I'll continue on the advantages of limited liability partnership. Over the years, the Malaysian Companies Commission, it is called as a SSM, has talked about how they may help the local entrepreneurs with their small to medium firms without affecting their personal wealth. The first is the separate legal entity. Under the Limited Liability Partnership Act of 2012, the business entity is called as a legal entity or juristic person. It can own assets, open a corporate bank account, hire employees, obtain business licenses, and operate as a legal and separate legal entity. Personal wealth will be protected and the business debt will not be held against it personally. Then the second is the ease of ownership transfer. The participant have the authority to assign or remove the participant as they seem fit. Any adjustment such as a new profit or loss sharing or partner remuneration packages can be decided at a monthly partner meeting or in a new partnership agreement. The last but not least, easy compliance. A certified company secretary is not required to be appointed once a limited liability partnership is formed, unlikely a private limited company which is Sendirian Berhad. Appointing a compliance officer who is usually one of the business partners himself is necessary. A limited liability partnership must also file an annual declaration of accounts without having to hire an auditor or submit an audited financial statement. And the limited liability partnership can be formed with amount of minimal capital. Now I will pass to the next presenter.
Thank you, Michelle. I will continue with the disadvantage of limited liability partnership. The limited liability partnership, there must be at least 2 members in a limited liability partnership. If one of the partners choose to leave the LLP, it may be necessary to dissolve it. Residential addresses may now be concealed from the public view thanks to the usage of service addresses. However, any prior address submitted to companies house stays public record until you pay to have it removed. Income that members do not wish made public may be reported in the accounts. Income is classified in a personal income and is taxed accordingly. Profits cannot be retained in the same way that they may in a company limited by shares. This means that all profit is effectively distributed with no opportunity to carry gains forward to a future tax year. Okay, the first point is a public disclosure of financial. According to the public disclosure of financial information provides real CSD research conducted by the Malaysian banks and finance groups. The legitimacy hypothesis was proven to be supported by business size, listing status, and the company's age using legitimacy theory. The results for the profitability variable support Patents 1991 premise that the decision to publish social information is influenced by public pressure rather than profitability. Next is the extensive penalty for non-compliance. Even if an LLP is inactive, Forms 8 and 11 must be filed annually. Non-compliance will result in a fine of INR 100 per form per day. Furthermore, the LLP and its DPs might face a fine of up to RM5 lakhs. Appropriateship or traditional partnership corporation is not required to submit annual forms, and there are a non-compliance cost. Lastly, the limited funding alternative. Limited funding alternative is a venture capitalist, VCS, angel investors, and private equity firms will be put off by LLP structure. There is no separation of ownership and management. All LLP shareholders must be partners with defined responsibility to the LLP. For these reasons, LLP is not the greatest solution for companies trying to fast grow or attract startup or venture capital. Okay, the next is next slide. The next is issues faced by the limited liability partnership. There are few limited partnerships here, which is the first one is the difficulties in obtaining bank facilities, which is LLP account opening will take longer than companies Berhad. The procedure took so lengthy because bankers contact access LLP information online. Information must be retrieved at some counter. PLG will have trouble receiving a loan since LLP's accounts are not audited. The second was no online service for LLP. LLP can be simply set up using My LLP. However, company profile and certificate applications still go via CCM. Inland Revenue Board doesn't allow LLP online tax registration or filing. All submission must go via counter, which takes time. The next is lack of awareness in LLP. LLP or PLT is still not well known, which is perkongsian liability terhad. This may affect corporate branding. Most bank forms and internet portals don't accept LLP registration numbers. The next is difficulties in tendering project. Most of the large projects, particularly government projects, require that only limited firms, which is Sindran Berhad, bid for tenders. Low credit ratings. The credit ratings of LLPs suffers from a lack of understanding. LLPs do not meet statutory audit on annual basis. Our customers are having difficulty obtaining credit from their suppliers, especially major corporate clients. Last is the tax incentive. Specific incentive offered to a corporation do not apply to an all the while the issue the limited liability, the first ever been opened by the 3E advisory. Okay, I will pass it to the next presenter. Thank you.
Thank you, Nandini. So now I'm going to present about the recommendation. So future studies should look into the integral structure of LLPS, which may be recognized as the corporation while yet maintaining the flexibility of the partnership agreement. Furthermore, the taxation situation of LLPs under the Income Tax Act 1967 is the fascinating issues to investigate. Visibility to the benefit of LLPs means LLPs may be utilized to attract investors, traders, and commercial interests both locally and internationally, while also strengthening Malaysia's business climate. In addition, the LLP established for the transfer to it of all the business assets and liabilities of a partnership company should be permit to recover previously incurred tax characteristics with no time restrictions on utilizations. As well, if there are fewer than two parties, the only surviving partner should be allotted a 2-year grace period to either locate a new partner or winding up the LLP. If he does not locate a replacement partner or start winding up the LLP within the grace period, he should be responsible for all of the LLP's liabilities and responsibilities occur after the grace period end, and the court may order the LLP's winding up. The same is true for a corporation format with the intention of transferring its operations to LLPS. Both partnership and corporation should be exempt from stamp duty on any transfer of the property in conjunction with any corporations. At least two partners are required in an LLP. Other than that, the status of LLPs with regard to their ability to practice in court has to be clarified, and any doubt should be resolved, and also the LLP Act should be include a provision that allows an LLP to convert the standard partnership. So that's all for recommendation. Now I move to conclusion. So the conclusion is LLP is a type of corporate entity that was legally introduced in Malaysia with the approval of the LLPA 2012. LLPs combine the greatest aspect of the private firm and classic partnership. Because of the parallel between the finance aspect, the common classification of the rule from both business and partnership law is appropriate to LLPs when resolving legal matters before the court. The fundamental sources of LLPs is the LLPA 2012, which contain the necessary provisions. When assessing the tax of LLPs, however, the Income Tax Act of 1967 should be used. In terms of starting, maintaining, and dissolving an LLP, the Companies Commission of Malaysia and the Inland Revenue Board of Malaysia are the most relevant regulators. General contract law and partnership law standards should be applied in the event of branch of an LLP agent among in partners. An LLP is a profitable choice for corporate entity form because of its greatest attribute. A limited liability partnership combines the benefit for the firm with the flexibility for the partnership. In a partnership business, it permits the individual partners to avoid joint liability. Business are realizing the benefit of joining an LLP, which have been a godsend to the India startup ecosystem. That's all from me. Thank you.
Thank you.